lot of contractors tell me that their tax guy is telling them to buy a truck in order to save on tax. And I can't emphasize more how this is a dumb idea. If you need a truck because your business needs a truck, buy a truck. That's not an issue. But to do it to save on taxes, it doesn't work. It doesn't work because of the difference between depreciation, real depreciation, and tax depreciation, right? Writing off a truck, right? And so the idea is depreciation just means the using up of an asset, right? So like you put a truck on the road, especially if you buy a new truck, as soon as you drive it off the lot, it's worth less money, right? So actual like accounting depreciation is you buy this truck for $50,000 in year one. In year two, it's worth less, and in year three, it's worth less. Maybe it's worth 20,000. Then maybe year three, it's getting old. You sell it, you buy a new one, you do the whole thing over and over again, right? Tax depreciation or writing off bonus depreciation, right? Whatever you want to call it, is the idea is that you're going to take this whole $50,000 value, you're going to use that as an expense all in year one, right? And so this number, what the truck is now worth, right, from a tax standpoint, is called your basis, and that is now zero when you do that, right? So if you take it, over a 5-year time frame, maybe in year three, it's worth $20,000 as a basis, right? If you write it off, right, bonus depreciation, it's zero. Here's why this matters is because when you sell this truck at a zero basis, right, for the $20,000 that it's still worth, you end up paying ordinary income tax on that $20,000. And so you spend $50,000, right, to lose $30,000 on the value of the truck, to then sell it for $20,000. And what happens? That $20,000 is taxed. Whatever you sell it for is taxed for ordinary income tax, right? And so one of the things I have contractors think about and I look at for them is making sure that, hey, if you're going to write off a truck this year, like, let's make sure we're not planning on making a ton more money in the future when we sell the truck. Because the last thing you want to do is to write off a truck while you're in the 12% tax bracket and then pay ordinary income tax on the truck when you sell it in the 22, 24, 37% tax bracket. You're actually not saving money in the long haul. Remember, the goal is to take more money home from the business, not to trick the government. And so if this truck isn't actually making your business more money, taking more money home, putting more money in your pocket, it's just a tax trick that ends up being a tax trap.